falling wedge, bullish continuation. So we have to see this pattern in an upside move. So this is our impulsive move, followed by a corrective move that formed into falling wedge. So whenever we see this pattern forming, we can anticipate that there will be an upside move. So what we have to do is wait for a breakout, right? So this will be our confirmation. And if we want to trade this pattern, we will put our invalidation just below the low after price breaks out from this pattern. All right. Now for our target, first target would be this recent resistance. All right. So since this is a resistance, there's a possibility that price may react at this level. Now for our second target, the second target is 100% measured move. So the measurement of this impulsive move from starting point from point A to point B plotted at the end of correction. All right. So this is our C and this is our D. All right. So this would be our second target. All right. So let's have an example. Australian dollar versus Japanese yen daily time frame. So as you can see, coming from a downside move, price impulsively move up, breaking this previous lower high and then making a higher high. Now, of course, if we have a higher high, we can expect for price to move down and create a higher low. All right. So this is our impulsive move, followed by a corrective move that formed into a falling wedge. And as you can see, this wedge pattern ended at support level. All right. So previous resistance turned into support, formed a continuation pattern. Impulsive move, corrective move. All right. So we will wait for a breakout and then place our invalidation just below the pattern. So for our target, first target, this recent high, and then our second target is a measured move from point A to point B, plotted at the end of this correction. All right. So this would be our second target. GBP JPY for our time frame. So we are in an uptrending market, higher high, higher low, higher high, higher low. Impulsive move, corrective move, impulsive move, corrective move, impulsive move, right? So impulsive move followed by a corrective move that formed a falling wedge. So this pattern ended at a support level. So previous resistance turned into support. All right. So we will wait for a breakout and then put our invalidation just below the pattern. And then for our target, first target, recent resistance, and then second target is measured move from point A to point B, plotted at the end of correction from point C to point D. All right, so this would be our second target. Rising wedge, bearish continuation. So this is the opposite of falling wedge. So we have to see an impulsive move downside followed by a corrective move that will form into rising wedge. All right. So we are anticipating another move downside and we will wait for a breakdown. So this would be our confirmation. Invalidation is above the high, and for our target, first target would be recent support, and then second target is a measured move. Let's have an example. Bitcoin daily time frame. So we have this impulsive move downside, creating a lower low and then lower high. So from Lower low to lower high is our corrective move that formed a rising wedge pattern, right? And also, as we can see, price also rejected this previous resistance. Okay, so if we want to trade this, we will wait for a confirmation, a breakdown, and then invalidation above the high for our first target, recent support, and then second target is a measured move from point A to point B plotted at the end of correction, so point C to point D. So this is our second target. USD CAD daily time frame. So basically we are in a downtrending market, lower low, lower high, lower low, lower high, lower low, right? So after this impulsive move downside, price entered into a corrective phase, then formed a rising wedge pattern. So again, this pattern ended at a resistance level. Previous support turned into resistance. So we will wait for a breakout and then put our invalidation above the high. Now for our target, first target, recent support, and then the second target is from point A to point B. So um, this level where this impulsive move started from this low, all right, plotted at the end of correction. Okay, so our second target would be right here. So as you can see, when price reaches this second target, it got rejected and then moved up. Ascending wedge, bearish reversal. So since this pattern is a bearish reversal pattern, we have to see this after an upside move. All right, so this is our impulsive move to the upside, followed by deceleration. Okay, so basically, price is losing momentum. And then for our confirmation, we will wait for a breakdown. All right. So invalidation is above the pattern, and then our target will be the starting point of this wedge. Okay, let's have an example. Euro USD daily time frame. So price rejected this level, very aggressive move downside, and then tested this level once again, and then formed an ascending wedge pattern. So as you can see, we have a very impulsive move to the upside, followed by deceleration, right? So this pattern decelerates at this resistance level. Okay, so we will wait for a breakdown and then put our invalidation just above the pattern. Now for our target in this case will be the starting point of this wedge. So at this level, all right. British pound US dollar daily time frame. So coming from a downside move, established a support level right here, and then rallied to the upside, making higher highs and higher lows. And then after this acceleration, price formed a price formed an ascending wedge pattern. We are also at resistance level. Okay, so if we want to trade this pattern, we will wait for a breakdown and then invalidation above the high. So our target will be this level. All right, so this is where this pattern has formed. Okay, descending wedge. So the opposite of ascending wedge. So this one is a bullish reversal pattern. So we should see this after a downside move. So this is our impulsive move, followed by deceleration, and then we will wait for a breakout. Okay, so this is our confirmation. Then invalidation below the low, then target the starting point of this wedge. Let's have an example, dollar index. So coming from an upside move and then move down, form the descending wedge pattern at this support level. Okay, so we will wait for a breakout and then invalidation below the low, and then our target would be at this level. Okay, so after this decline, price decelerate at this support level. So as you can see, looking left, this level was tested as support, right? Then formed a descending wedge pattern. So at this point, when we see price forming this pattern towards this support level, we can anticipate that there's a high chance that it will reverse to the upside. All right, so we will wait for price to breaks out of this pattern and then put our stop loss or invalidation below the low. Okay, now our target, the starting point of this wedge. Another example, AUD CAD daily time frame. So as you can see from here, we have a downside move, lower high, lower low, lower high, lower low. So at this point, we are in a downtrending market. But as you can see, after this last push downside, price decelerates and formed a descending wedge pattern. And this level was also a previous support, right? So it was tested before, and then price aggressively moved to the upside. So we can expect that once price tested this level again, there will be a reaction. And it just so happened that there is a descending wedge pattern that formed at this support level. All right, so we will wait for breakout and then invalidation below the low, target starting point of this wedge pattern. Okay, symmetrical triangle continuation pattern. So this pattern is pretty much the same with falling wedge or rising wedge. The only difference is their slope. All right, the slope of the triangle. So we have an upside move. So this is our impulsive move, followed by a corrective move. Okay. So as you can see, it pretty much looks like a falling wedge, right? So we will wait for a breakout, right? In an anticipation for an upside move. So this will be our confirmation. And then our invalidation will be below the low. All right. And then our first target is the recent resistance. And then the second target is a measured move. So again, from point A to point B, where this impulsive move started, plotted at the end of this pattern. So that will be our target from point C to point D. Okay. So let's have an example. Gold 4-hour time frame. So coming from an upside move. So impulsive move creating a higher high. So we can expect for price to create a lower or higher low. Okay. And then price formed a symmetrical triangle. Okay. So if we want to trade this, we will wait for a, a breakout, right? And also, as you can see, price also tested this support level before, right? So this is our confirmation, breakout, and then invalidation just below the pattern. Okay, then first target will be the recent resistance or the recent high. Now, let's say we want to trade this, let's say we go for a long after this breakout, put our stop loss above below the pattern. Of course, we will not place our target here because uh, it will give us a negative risk reward ratio, right? So we're risking more for this small profit. So what we can do is to place our target at the measured move, right? So from point A to point B, plotted at the end of this pattern. So from point C to point D. So this will be our profit target. All right. Another example, CAD JPY. So impulsive move to the upside, followed by a corrective move that formed a symmetrical triangle. Okay. So confirmation, we will wait for a breakout. And then again, price also tested this support level, right? Okay. And then breakout. So confirmation. And then invalidation below the low, of the pattern. First target, this high. So as you can see, if we entered long here, this will not give us a good risk reward ratio, right? Because our stop loss is right here and then our target is here. So we're risking this much to get this little. Okay? So the ideal target for this one is a measured move. So from point A to point B, starting point of this impulsive move, plotted at the end of correction. So from point C to point D, and this will be our profit target. Okay. Another example. So we are in a downtrending market, right? Impulsive move, corrective, impulsive, corrective, impulsive, corrective. Okay. So after this downside move, price formed a symmetrical triangle. We are also at a resistance level. So previous support turned into resistance. So we will wait for a breakout. First invalidation above the high of the pattern. First target. So basically, we will not use this as our first target because it will give us a negative risk reward ratio. We will risk more. Uh, we will risk more and only take a very small profit if we put our target here, right? So what we're gonna do is put our target at a measured move. So from point A to point B to point C and then point D. So we will place our target here. Okay. AUD USD for our time frame. So downtrending market, impulsive move downside, followed by a corrective move that formed a symmetrical triangle. This corrective move also tested this previous support, turned into resistance. Okay. So we will wait for confirmation for a breakdown, and then our invalidation is above the high. So first target will be this one, and then second target is a measured move. Ascending triangle, bullish continuation. So we will see this pattern after an upside move. So this is our impulsive move followed by a consolidation. So whenever we see this pattern, we will anticipate a price move to the upside. Okay? So for our confirmation, we will wait for a breakout, and then our invalidation is just below the pattern. Okay? Now for our target, we will measure the height of this triangle from the starting point plotted after price breaking out of this pattern. Okay, so let's have an example. Crude oil daily time frame. So impulsive move to the upside, followed by a consolidation that formed into an ascending triangle. So we will wait for a breakout and then put our invalidation below the low, and then for our target, the height of this triangle plotted after breaking out. Okay, so this will be our profit target. Another example, Canadian dollar versus Japanese yen daily time frame. So an upside move followed by ascending triangle. So consolidation. We will wait again for a breakout for our confirmation, and then invalidation below the low. So there's two ways to trade this pattern, right? So first is a breakout. So once we see price breaks out of this pattern, we can enter that breakout or wait for a pullback. All right. So this resistance will act as support, and then wait for let's say a candlestick rejection before entering into this trade. Okay. All right, so going back, invalidation below the low, and then our profit target will be the height of this triangle plotted after price breaks out of this pattern. All right. Descending triangle, bearish continuation. So just the opposite of ascending triangle. So impulsive move downside followed by consolidation in an anticipation for a move downside. All right, so we will wait for a breakdown for our confirmation, and then invalidation above the pattern. So guys, it is very important to wait for confirmation because it can still break out and then reverse this downside move to upside move. All right, so always wait for confirmation. Okay, so again, invalidation above the high, and then our target is the height of this uh, triangle plotted after this breakdown. Okay, so this will be our target. Again, let's have an example. NZD USD daily time frame. So coming from an impulsive move downside, followed by this descending triangle pattern. All right, so we will wait for a breakdown for our confirmation, and then put our invalidation above the high, and then our target will be the height of this triangle. Okay, GBP AUD 15-minute time frame. So consolidation and then breakdown forming a lower low. So impulsive move downside followed by descending triangle. So for us to confirm this continuation pattern, we will wait for a breakdown. Okay, and then invalidation above the pattern. Target is the height of this triangle.